Gold has already dropped more than $130 from the highs, and tonight, everyone is waiting for Kevin Warsh to show up at Jackson Hole and hit gold with another hawkish message. But here's the problem. What if the market has already priced him in? Gold has fallen from nearly $4,697 to $4,565 before Warsh has even said a word. So tonight, hawkish may not be enough. If Warsh wants to send gold into another leg lower, he may have to deliver something even more hawkish than the market is already expecting. And that's why I'm not going to spend tonight counting hawkish words. Can he actually force the market to reprice gold again? Let me show you why those three numbers matter. Gold's entire short-term structure has changed. This rally started around $4,325. From there, gold ripped through $4,400, $4,500, $4,600, and eventually reached $4,696.79. Almost a $400 run, and then it hit the wall at $4,700. That was the turning point. The first sell-off knocked almost $90 off the price. Gold tried to recover, but the rebound stalled around $4,673. Then another push failed around $4,643, and after that, the levels started falling one after another. $4,650, gone. $4,640, gone. $4,620, gone. And finally, $4,600, gone. Gold eventually traded all the way down to roughly $4,565. But the $130 decline isn't the part that concerns me most. It's the way gold is now trading. On the way up, buyers were waiting for every dip. Gold would sell off, buyers would step in. Now we're seeing almost the exact opposite. Every bounce is being sold. Look at the highs: $4,697, then $4,673, then roughly $4,643. That's a very different market from the one that was charging toward $4,700. And we saw it again today. Gold pushed up toward $4,611 earlier in the session. It couldn't hold it. The price then fell back toward $4,585. And then, out of nowhere, buyers came in hard. Gold ripped higher. $4,590, $4,595. And suddenly, $4,600 was back on the screen. For a moment, it looked like the bulls might finally be taking control again. But they couldn't hold it. Sellers came straight back in. So going into Jackson Hole, I'm not going to pretend that chart is bullish. It isn't. The short-term structure still favors the sellers, but that does not mean I want to chase gold lower from here. And this is where tonight gets interesting. Because markets don't trade headlines, they trade surprises. There's a huge difference. The market already knows inflation is still a problem. It already knows the Fed doesn't have an easy path toward aggressive easing, and traders have had plenty of time to prepare. Meanwhile, gold has already fallen more than $130. So think about what has to happen tonight. If everyone expects Warsh to be hawkish, and he comes out hawkish, where's the surprise? That message may already be sitting in the price. For another major leg lower, Warsh may need to give the market something it hasn't already prepared for, something that forces traders to rethink. That's the setup I'm watching. Not hawkish versus dovish, expected versus unexpected. And that's where $4,565 becomes critical. Let's say Warsh comes out swinging. The message is clearly hawkish. Treasury yields jump. The dollar catches a bid. Gold gets hit. It loses $4,585 and heads straight back toward $4,565. Now we're at the real test. If gold breaks $4,565 cleanly, stays below it, and every attempt to recover gets rejected, then we have new information. The correction from $4,697 is probably moving into another phase. At that point, my base case around $4,600 is wrong. Simply as that, I don't want to move the goalposts after the fact. $4,565 breaks and stays broken. My current weekly close call is in, but there's another scenario that I think is even more interesting. Warsh comes out hawkish. Yields move higher. The dollar strengthens. Gold gets sold initially, but around $4,565, buyers start absorbing the pressure. Then gold comes back through $4,585. Then it starts fighting for $4,600 again. That would tell us something very different, because the market got the hawkish message. But it didn't get enough new information to justify another major and that's where traders need to be careful. One of the easiest mistakes around events like Jackson Hole is to trade the adjective instead of the reaction. Hawkish, sell. Dovish, buy. Markets aren't that simple. Imagine everyone knows bad news is coming. Long positions have already been cut. Short positions have already been built. Then the bad news finally arrives. At that point, you don't necessarily need good news for the market to reverse. The highs are getting lower. $4,600 has been lost, and today's attempt to reclaim it was rejected. I'm not fighting that chart, but once Warsh starts speaking, the setup changes. I'm expecting violent, two-way volatility, and after a $130 correction from the highs, I do not have another straight-line $100 collapse as my base case. Could it happen? Of course. My base case is different. I think we could see a sharp initial reaction, followed by a major battle around $4,600, and I'm going to put an actual number on it. Before the speech, not tomorrow, after we already know what happened. My base case range for the weekly close is $4,580 to $4,610. If you want me to narrow it down even further, $4,590 to $4,600. Now that does not mean gold can't trade well outside that range during the speech. It probably will. This is Jackson Hole. I'm talking about where gold may settle after the first wave of emotion burns off. And I have one very clear invalidation level. $4,565. If Warsh speaks, gold breaks $4,565 decisively, and the market continues trading below it. Throw my $4,580 to $4,610. Call out on the upside. Getting back above $4,600 is only step one. The next number is $4,615, because reclaiming $4,600 gets the bulls back into the fight. But breaking $4,615 starts challenging the pattern of weaker rebounds. So, forget 15 indicators tonight. Forget drawing another 10 lines across the chart. I'm watching 3 numbers. $4,565. That's the risk line. $4,600. That's the battlefield. And $4,615. That's where a rebound becomes interesting. But above all 3 numbers, there's one thing that matters most tonight: the gap between expectations and reality. So the question tonight isn't whether he sounds tough. The question is whether anything he says is powerful enough to make traders reprice gold. And the chart will tell us. If it does, watch $4,565. If it doesn't, watch $4,600. And then $4,615. So I'm putting my call on the record right now. Weekly close, $4,580 to $4,610. Core zone, $4,590 to $4,600. Invalidation, $4,565. Now you make the call. After Warsh speaks at Jackson Hole, does gold finish back above $4,600? Yes or no? Drop your answer in the comments before the speech. And subscribe to Grand Markets, because when the candle closes, we're coming back. No moving the goalposts. We'll check the prediction against the market and see who got it right. Good luck trading.